welcome to A Taste of Salt. Today we're going to talk about Nexus and Reporting. Why does it matter? Because what you say is what you say. And if you don't say things consistently, the government can figure it out. They have the ability to match information. So for example, if you report $1 million in the state for sales tax in a year, but you only report $500,000 on your income tax return, they know those numbers don't match up, and that's going to raise an audit. So it's very important that you pay attention to these issues when you are reporting into a jurisdiction, that you don't take it lightly. And the way the forms are required to be filled out do require some level of understanding so you are consistent in your information reporting. And I think the things that people really struggle with is how the information comes in their general ledger system and how they push it out to the government forms. Even though the net effect, maybe you only owe this much to a government, if you tell them some inflammatory number, like for example, you report worldwide sales instead of state sales, and then you net everything out as exempt and then the net tax amount, they're gonna, I wonder what's going on because things aren't gonna match up. So it's really important to be paying attention to that. And I also want to mention things about Nexus that I think a lot of people don't understand in addition to Wayfair. And honestly, while Wayfair was an important and remarkable decision on June 21st of 2018, Nexus really already existed via various levels of activity in a state that a lot of companies misunderstand. For example, remote employees. Who would have thought hiring someone and letting them go move out of state to follow their fancy would create a Nexus obligation? But it does. Telecommuting obviously could be the same situation where you live in a remote state just a state over and they are allowed to work from home. That can create Nexus. Third parties that are soliciting sales on your behalf can create sales tax Nexus. And I think a lot of people think, oh, that's a 1099 employee. That's not a Nexus creating activity because they're not my employee. Well, that's not the case at all. So there's many things that you can create Nexus from that aren't just Wayfair, meaning economic amount of a dollar flow or an amount of transactions. So when it's really important when you think about how to report your taxes correctly, is important to get in front of the information on the front end. So within the sales cycle, so that you understand how is the data being pushed out via the PO process, how is it being entered into your system in order to understand the jurisdictional reporting. I'll tell you a funny story. I had a client recently tell me they have a client, they're a very large company, and they're billing them in Texas, but actually they're meeting with them in Minnesota. So they're all over the nation of this America, right? So why does the revenue report to Texas? Well, that could have just been a reporting error. Well, it matters if it's in Texas versus Minnesota because there's entirely different tax consequences. So it was an opportunity to go back and have that client really think about what information they gathered and how they set that client up in their billing system to make sure that the tax follows the right consequence. So that's really important. And the other thing I want to mention is I think a lot of people are like, oh, I don't want to deal with the sales tax. I don't want to deal with all the rates. It's so complicated. I'm just going to pick a rate and I'm going to charge it. Well, I don't know if you're familiar, but just recently DoorDash got written up in the paper for overcharging tax in 3 states that do not have a sales tax. And I will mention that to you right now. Remember the acronym NOMAD. That's New Hampshire, Oregon, Montana, Alaska, and Delaware. NOMAD. It's a great little trick. So that was a small taste of salt. Stay tuned to this channel for our next segment.